Hey guys, TommyBryson here, and today I'm going to tell you exactly why did I stop buying stocks back in March. And by the way, the last stock I bought was Delta that made me around 100% of my money. So if everything's going okay, why would I go ahead and stop buying stocks? And by the way, my heroes are basically Charlie Munger and also Warren Buffett. Why? Because they have a really solid track record. And on top of that, everything I know today about investing, I learned from Charlie Munger, Warren Buffett, Peter Lynch, and on top of that, also Philip Fisher, one of the best books on investments, by the way, if you want to learn more about investing. But I learned something while reading all those books about investments that made me go ahead and stop investing into stocks. So I will share with you guys today in this video. But if you guys are new here, I post videos every single day, so you should also subscribe and hit the bell so you're notified. On top of that, also destroy the like button. But here's exactly what I learned, guys, okay? Although Warren and Charlie are very good at investing, the answer is that does not mean you should go ahead and invest the way they invest, because basically the more money you have, the less investment options you actually have out there. It sounds insane, I know, but when you have billions of dollars, the companies you invest into and that pool of companies is a lot smaller, meaning you're not looking for bargains or crazy deals out there. You're looking for good, fair prices on companies to actually grow your money over a long period of time. And that's what Warren and Charlie actually do. But for example, when you don't have billions or millions of dollars, the answer is your investment strategy has to be more different to actually grow your money a lot faster. So basically, the way Warren invests today is that he invests, for example, into the Walmarts, into the Apples, into the Coca-Colas, right? The companies that already have, for example, a built-in monopoly of some sorts. But the answer is when you're dealing with a small amount of money, you can't invest into those companies. Basically, the return is not going to be that good over the short term, because basically you need more money to go ahead and make more money in a way. So the answer is you should be investing into the Walmarts, into the Apples, and also Coca-Colas before they become the Coca-Colas and the Apples and the Walmarts, right? So the answer is you have to invest into smaller companies with big potential for growth. Now tell me, this sounds insane, but the answer is yeah, it is, but it is very true, because if you look at it, when Warren first started, he was investing basically into companies that were going for a bargain, had one last puff in it. Basically, when you liquidate it, you actually make more money. But on top of that, investing into early companies, that way it grows and grows and grows more over time. That's the whole idea here. So basically, you have to find companies before Wall Street finds out about these companies. I mean, how is that possible? Well, the answer is it's not as impossible as you probably think. Before a company comes to the radar of Wall Street, in reality, it would be on your radar a lot sooner, because basically you don't have any big business or a boss looking over you, or for example bureaucracy, because basically you know a good company when you see it. You have a good management, you have a good CEO, and on top of it you have a good product, and more importantly you have a solid business. That is what you're looking for, and if you're looking, you're going to find it eventually. Notice I said eventually, not all of a sudden, because basically it is going to take a lot of time to find the new Walmart, to find the new Apple, and guess what? It is going to be hard, and on top of that, it is going to be risky. But that's why you take $1,000 and turn it to 10K or $1 million. But you can't take $1,000 and invest it into Apple and expect that money to make you rich in a short period of time, okay? That is not what's actually going to happen here. But the good news is, guys, that basically, hey, if you have the right temperament for investing, you're calm, and on top of that, you have the right knowledge, you know exactly what to buy and understand investing, you're gonna be good, okay? But the bad news is that basically that, hey, you have to wait, you have to be patient, and yes, it is still very risky, so you still have to go ahead and wait, because in reality, what you're looking for is mispriced stocks to actually go ahead and buy and hold them for the long term while that stock is growing and growing and growing. And in reality, you don't need to be Peter Lynch and basically pick, for example, thousands of companies. By the way, Peter Lynch is awesome. I love Peter Lynch, but the answer is you don't have to do that. You only have to find around 3 to 20 good investments to actually go ahead and make you very, very, very wealthy. The same with Warren Buffett, okay? If you think he's made billions of dollars by investing into random companies, the answer is no. He invested into a good chunk of companies, and boom, that made him the billionaire he basically is today. But what I realized was this, guys, overall, okay? I know what I need to do. I know what it takes, and I know it is going to be hard, but I also realized that there is also one fundamental rule. When Warren started investing, he had income, also passive income. On top of that, when he first got his job with Graham, Benjamin Graham, by the way, he was around like 22, I think, or so, or like 21. But the answer is his salary was around 100K. So the point is, you have to make sure you have a good foundation. That way you can invest in peace and not worry about, hey, making a bad decision here and there. You don't want to be the guy that's basically investing for his livelihood, because at that point, you're going to rush into some bad decisions, and that is not going to be a good thing. So you have to have a strong foundation, and that's why Peter Lynch says, hey, before you start investing, make sure you have a house, okay? And also have income coming in. That way, you're investing the correct way and not worried just about making money, because by that point, you're going to be losing the game already, okay? You have to be very, very careful. So here's exactly what I do and what I invest into. And the answer is I invest into ETFs and also index funds with my retirement accounts. Meaning, for example, I buy ETFs very well diversified into the US stock market. Also, for example, the small sector, also the growing sector, emerging markets, also outside of the US, also into bonds, and on top of that, also into corporate bonds, meaning I'm very well diversified. That way, I don't carry that much risk, and that portfolio can basically build me passive income to sustain me while I'm going ahead and investing into individual stocks and companies, trying to find the next Walmart or the next Apple before it becomes the next Apple and Walmart. And by the way, it is very, very hard to actually do that, just so you guys actually know. But by doing this and also following the 4% rule, it means that once my portfolio is large enough, I can go ahead and take money out. And by the way, the 4% rule is basically a rule that says, hey, if you have $1 million portfolio and you take out 4%, which is around 40K every single year, that money is going to last you a minimum of around 33 years. And potentially, if things don't go wrong, it will last you forever, because basically your investments grow at 8% or 10% while you're only taking 4%, which means you're going to have money there forever and forever and forever. That's the goal right there. So that's basically what I'm basically doing right now, building my foundation. On top of that, I'm going to buy a house for cash pretty soon in around 3 to 4 years. That way, I also have that. That way, I can focus on investing, not because I need money or because basically I can't pay my bills, because basically I want to and I love the game. That is the best thing to actually do. However, that is not going to be the best strategy, because basically you have to keep looking and also investing and practicing, because if you don't, you're not going to be a good investor. It's kind of like, hey, all I do is read, but I don't practice. That's not a good thing. So in reality, while I'm doing this, I'm going to take around 10,000 or 5K and set the money aside to actually go ahead and invest into these companies individually. That way, I practice and know what I'm doing. But by the time I'm done with my portfolio, ETFs, and also, for example, my house for cash, the answer is I know everything I need to do. And then when I find a mispriced company selling for a pretty good price with good management, a good product, and also great prospects, the answer is I can go ahead and bet big without worrying about, hey, if this goes wrong, although I know it won't, the answer is I might lose everything I have. And that's not what I actually want. And by the way, this works great, for example, if you have a very high paying job that you might not know is going to be there forever, and you want to take that money, invest it very quickly, build passive income quickly, have a house very quickly, you pay for cash. That way, your expenses are very low and you have extra money to go out there and invest. And by the way, investing is a 20 to 40 year career. It is not a career that basically, hey, Tommy, you're 23 today, by 30, you're going to be a billionaire. The answer is most likely that is not going to be the case. Most likely, every year, I might invest once or twice. That is going to be about it, because basically it's a game of patience. It's a game of understanding what you're investing into, and it's not a game of, hey, trade, because basically there are fees and taxes that you don't want to eat up on your compound interest in the future. And that's why I don't buy individual stocks anymore. And by the way, if you want to know exactly what I invest into, well, all those investments are in the description down below. And by the way, I use M1 Finance to invest. So link down below to my portfolio. When you click it, you can see exactly what I invest into. That way, you know exactly what I invest into. But one thing is this, okay? M1 Finance has M1 Finance Plus, and that costs around $128. And it does give you cool features. But today, until like December 31st, before the New Year's, the answer is they give you M1 Finance Plus for 1 year for free. So I went ahead and signed up. So go ahead and sign up too. But the answer is once the 1 year is over, if I don't see any benefits, I will cancel. But it makes no sense not to get it today, because basically it's going to be free for an entire year. But if it doesn't work out, after the year, I'm going to go ahead and cancel it. But guys, that is basically what I do with my investments, and that's basically why today I'm not investing into individual stocks, although I will start pretty soon again, but only with a 5 to 10K budget to play around with and to basically try out my techniques with. But after that, all my money is going towards passive investments until I have a solid foundation, just like all those investors actually did, if you notice, okay? Now, that's it. See you guys next time. Thanks for watching. If you learned something here, guys, well, like this video on top of that. Also, subscribe and hit the bell so you're notified. And if you want to text me or talk to me one-on-one, join my Patreon down below where I share my portfolio, my dividends, and also my strategy. So join my Patreon down below or send me a DM on Instagram at TommyBryson. And before I go, if you want to see exactly what I invest into and the full details of my portfolio and how to invest $1,000, here's that video right here, and click my face right now. I'll see you guys tomorrow. Thanks for watching, and as always, peace.